following is an update and technical analysis on gold futures based upon the daily interval, in which I will additionally deep dive into the gold miners for additional clues, with some of the insiders piling in potentially within the gold miners. Well, in 2023 of last year, the spot gold marked its highest nominal yearly close ever. We're looking at the March futures COT report. There's a positive outlook, seemingly anticipating a banking crisis, the end of a quantitative tightening and or the banking term funding program. And surprisingly, the physical market index and the Shanghai Gold Exchange continue to decline on a percentage over spot basis, where the intraday drop of 4% set a new 18-month low. And despite the futures signaling a potential regional bank crisis, the tangible metals market suggests it's not reflecting the same sentiment, at least not yet, where the current pricing in the physical market leans more towards anticipating a demand diminishing event. And I believe we've reached a critical juncture within the technical aspect of gold. And here we are, especially over highlighting where we actually shorted this primary reactionary uptrend line, concealed primary reactionary high and low trend line, where we put in beautiful divergent eye. We had negative and bearish divergences, consolidated briefly, took a nice red solid sell signal. That was your first initial sell signal, completely collapsed below the 382 fibs retracement. That was good for a 5% crash to the downside, tipping right off the 1826.09 price support. And that changed the momentum and the structure of the price action in the commodity here, where we additionally put in concealed, hidden positive divergence on all four key technical momentum indicators. And that was the technical induced catalyst for a complete gap up to the upside, back tested the 1865.99 price support, and was off to the races to re-challenge the primary reactionary downtrend line with major reactionary highs across that entire space there. Pop that level. I believe this was the October 7th Israel-Hamas war that broke out here. We had popped that level, completely contributed to a consolidation phase, back tested off the 50-day moving average, and it has been off to the races since. And here we are, geared in a symmetrical triangle pattern, major reactionary highs across that space, with a major reactionary trend line support that will be the utmost, I believe, the pivotal inflection point for long traders and or bull traders to defend in confluence of the 50-day moving average down below. So called a dual line of price support, where long traders, long-term investors want to take this level out, defend it as heavily as possible to go on to re-challenge the primary reactionary downtrend line. And that will be exceedingly bullish if and when traders were able to take that level out with conviction and or authority, maybe a potential back test to go on to re-challenge the major reactionary all-time high here around 21.53 per ounce. Short sellers, bear traders want to see a solid infused red candle breakdown sell signal below that inflection point to go on a potential back test and or re-challenge the 2010.69 price support, ultimately undercutting its 50-day moving average and the primary support and trend line that would gear up for a major big price support level here that long traders would need to heavily defend to avert additional technical damage within the momentum indicators. And that would really be the line in the sand, in my opinion, for stops to go off, margin calls to revisit its 200-day moving average, and the 236 fibs retracement, call it 1978.77 price support. That is an additional dual line of price support that needs to be held heavily at all costs. Extremely bullish if we break out of the symmetrical triangle pattern, and then bearish if we break down below it, which would issue a potential, a potential sell signal. And whether I had to predict its next primary trend and trend change, I again believe some of the scope, that just when you consider the scope of this positive divergence and how it's just continuing to construct and build as the momentum indicators consolidate violently sideways, that could be the beginning stages of a potential bigger geared up move as just building coil energy like a boiling kettle pot. This could be an explosive move for its next underlying trend change. Long traders, bull traders here within the daily interval, I believe this is geared up as a great risk reward long trade setup to the long side based upon this dual price support level, issuing some stops below, if not gearing up to begin the scaling in process for a long trade setup. And then ultimately dollar cost averaging down below the 2010.69, scaling in a little bit further, if not the ultimate 236 fibs and the 200-day moving average for the long side to begin the utmost scaling in process for a big bounce to the upside. I believe we could additionally be within the beginning stages of an inverse, classic looking inverse head and shoulder bottom, which could transpire into a much larger, bigger gold price and long trade setup to the upside, which would gear up for a very powerful move, ultimately taking out some of these key price resistance levels and making a major, big short squeeze rally to the upside when you consider the amount of banking and or manipulation cast upon the commodity. Do not underestimate how powerful a rally could sustain itself. in a critical moment and or technical and or fundamental catalyst that could ensue to the upside. Taking you to the GDX, the gold miners ETF here off the daily interval. And I believe we are in a very precarious state as well with the daily trading based upon this primary reactionary uptrend line, call it multi-year price support off the September reactionary lows of 2023, cuts right through this inflection point, and we've popped this minor reactionary downtrend line, and here we are back testing it as of now with additional support down at the 27 price support and dual trend line support, again offering a great risk reward ratio long trade setup to the upside with multiple unfilled and unchecked gaps up above the 29.67 price resistance and the 30.51 additional unfilled gap for another 10% to the upside, and then ultimately a potential revisit of the primary downtrend line for 14.5%. And that would be the most telling move and or biggest inflection point we have seen in years on end here, dating back since almost 2022. You have the oscillator histogram beginning to print green candle closes up above. You have confirmed crossovers, minuscule crossover, bullish crossovers here in the moving average convergence in the oscillator. And that could be a setup for a whipsaw-like reaction back into the range of above the zero line threshold. And additionally, gaining momentum to the upside as the price action continues to consolidate in each direction. Could have been the beginning stages of a nice clean daily candle close breakout, buy signal up above, only to rechallenge and reflect and backtest this key price support level for additional bigger moves to come. Short sellers want to see a solid daily infused candle breakdown sell signal below, ultimately rechallenging and challenging and retesting some of these key price support levels. The core elements are immersed in a Middle East conflict, navigating through additional inflationary conditions and facing a buy the dip banking program that is slated to halt abruptly on March 11th.